Okie dokie. Hi everyone. Check out my angle. Looks fine. Okay. Looks like it was a timely video yesterday to talk about inflation. Um, we briefly went over how the French case numbers were spiking um, very high, out of trend. And something similar ended up happening in Germany, I believe. So let's just look at this COVID-19 data for Germany um, and Spain. We had pretty terrible day in the market. So here was Spain, down another 2.5%. China's doing okay, right? Because China apparently, apparently the virus was locked down very aggressively early on, and now they're not dealing with it as much. So this is the first time I'm going to say that this is not investment advice in any way, because I am not a financial professional. This is just my opinion and what I'm doing. So my biggest long positions right now are Chinese stocks. I think China's where you gotta be. They're not dealing with disinflationary pressures, whereas the rest of us are. So here's the Hong Kong stock index, okay, and down 0.3. So down, but down nearly. Spain was down nearly 10 times as much. Okay, here's Shanghai Composite. Went up for the day. The UK stock market, okay, down big, 3%. The German stock market, massive gap down, okay, and then down 4%. So, yesterday we talked about inflation expectation and what disinflation means for asset prices. And with fresh news of German shutdowns, disinflationary pressures were confirmed essentially. And stock market needs to price that in, and it falls. So here was something I had on short, Deutsche Bank, and I'm waiting for their earnings to come out. Here we go. Okay, so their earnings actually came out earlier today, and they weren't so bad. So I'll probably close out that short position tomorrow. And I went long all kinds of US stocks. We can just run through those real quick, kind of show you how I trade. So there's basically there are two trading strategies. Okay, there's what we call reversion to mean, and one we call trend following. Okay, so if you draw straight lines on a chart, okay, that bound the price we have here, right, a bounding channel, you can, when you do this, you're taking stock of the rate of change of the price, okay, you're noting a certain trend, a certain characteristic of the market. So I can take a regression trend right here, which tries to fit a, a linear classification to the data. Okay, so depending on what data you include, you basically come up with, some sort of trending box here. And so my trade on Walmart is a play that benefits from basically a lack of volatility. Okay, it benefits from stability. So the trade is short the 140 put and long the 138 put. Okay, I believe it's for next week. Okay, it's here. So, although it might be for the 20th, I like to trade monthly expiries because there's more liquidity in those options. So basically, I like to trade using this little indicator here called the cloud. Okay, and I trade with these two different settings, and we'll go into what that is on some other day. But basically, this green cloud is a dynamic retracement tool. Okay, so you can see like right here, okay, in this range right here, there's this, you have this extreme, this high extreme and this low extreme. Okay, and so if you put the retracement on those two extremes, then the 50% is right here on this green line. Okay, so in a nutshell, that's what this green cloud is doing, right? It's a range across time, okay, that defines like a it basically puts the support level at halfway between the top and the bottom of the range. Okay, so Walmart, AXP, American Express. Okay, so here the trend is sideways very clearly. And you can even define, say, like a double or a bigger range. Is the churn zone. Churn zone. Okay, so who knows? Maybe we can come down here and have a churn zone. But if we don't, then it seems the price is likely to stay up in this range. So upon market stabilization, look for that. And my trade here is actually a return to the cloud. Okay, so for next week, I'm hoping by next week we get back into this area right here. You could trade a return to the top of the cloud here, right? Because if the price is going sideways in a range, then how does it go? It goes from the bottom of the range to the top of the range to the bottom of the range to the top of the range to the bottom of the range. Okay, so if the mean is the middle, okay, of a trend, then we said before, right? reversion to mean is, one of the huge umbrella terms that define trading strategies. So the mean is the middle, essentially. So if we hit the bottom of the range, we can anticipate we go back to the middle. Okay, so that's my strategy on this, right? Mean reversion by next week. It's all kinds of reasons why this might happen. For one, the election takes place on Tuesday in the United States. This should be a massively uncertainty reducing event. So hopefully, former trends will resume once uncertainty is extricated from the market. But we'll see. That's what's great about this. You never know what's going to happen. Okay. There was one more stock that I opened up on today. And that was Caterpillar. Okay, so why do we like Caterpillar? A few reasons. So mean reversion, right? There's a trend, and you hit the extremes of that trend, of that distribution, and it wouldn't be a trend if it didn't persist over a long time, right? So look here. This is a range of Caterpillar's hourly volatility, right? You can see out here in March, coronavirus March, it blew out of the range, right? Highest volatility. So this is an outlier, okay? This whole thing right here. My play right now is essentially that volatility is going to collapse on this stock. Again, there are many drivers that could suggest this. There's also the chance it doesn't happen. So, but basically, it's similar to the Walmart trade. Okay, so let's see. It's that by November 20th, these monthly expiries again, okay, that the stock will be higher than it is now. So it's literally at 150 to 145. Okay, if the price stays out of this range, I will collect full premium, okay, on the trade. So we went over price trends, okay, and how they tend to, persist. And we just went over for the first time volatility trades, okay, trends, volatility trends. So, this was, just check this one out from the beginning of October. Vol tends to go from 5 to 17 to 5 to 20 to 5 to 20 to 5, to 5 to 25. Okay, so my play here is that vol comes back down to 5. Okay, that today was the big shakeout. Basically, we have lockdowns priced in now, hopefully fully priced in Spain, France, and Germany. Okay, so hopefully the market starts to stabilize from here. Okie dokie, people. So that's that's what's going on with me. Um, what's going on with you? Ooh, that's too dark. It got too dark. Well, I'm sorry. I tried to record earlier tomorrow. But have a good one.